All right, so you know how everyone's freaking out about a recession.
Yeah, it's been all over the news lately.
Well, while some folks are busy panicking, hedge funds are making some really interesting moves,
They're not letting any grass grow under their feet, that's for sure.
especially when it comes to gold and oil. They're like all over that.
Yeah, bold is a good word for it. It's like they're dusting off that old Cold War playbook, but, with a 2024 spin.
Okay, so walk us through this. What's going on?
Well, your sources point to this, like potent cocktail, geopolitical tension, think U.S.-China relations, right?
Yeah, definitely tense.
Totally. And then you mix that with economic slowdowns, particularly in China, and that's kind of the fuel for this whole frenzy.
So let's break it down. First up, gold. Classic safe haven asset, yeah.
Absolutely, yeah.
But your article, it says hedge funds are going all in, like 40% net long on gold futures.
It's a big bet.
Yeah. Now, for those of us who don't speak Wall Street, what does that even mean?
Basically, it means they're putting huge amounts of money on the line, betting that the price of gold is going to go up, way up.
But haven't we seen this movie before? Didn't they try this like 17 years ago when the Fed last cut rates?
They did, yeah, but this time the plot's got a few twists and turns. Back then, gold went up 20%, right? Alongside a stock market dip. But here's the thing. China's economic problems this time around, they're on another level.
Like way worse. Yeah.
We're talking about their property bubble potentially bursting, deflation,
Yeah.
rearing its ugly head.
Yeah, that's not good.
No, and those are factors that magnify the impact on global markets. And then you add on those like Cold War 2.0 vibes we talked about, adding to the uncertainty. This gold rush, it's not just about interest rate cuts. It's about gold being the ultimate safety blanket in a world that feels like it's teetering on the edge.
So they're basically betting on fear.
Yeah, essentially. Fear, uncertainty, and the potential for traditional markets to take a nosedive.
Okay. So gold's looking good for those in the know. What about oil, though? Your sources paint a very different picture there, like predictions of prices dropping to $40 a barrel. Is that all because of China's reduced demand?
China's a big part of it, yeah. You remember that whole property crisis we talked about?
Yeah.
Well, China's steel demand, which is a major indicator of construction activity, it's plummeted, like a
Yeah.
15% drop year on year. And that directly impacts how much oil they need, which of course has a ripple effect on the global market.
So like less building, less oil.
Exactly.
So we've got China hitting the brakes on buying oil and North America pumping out more and more, like a perfect storm. But how does this all connect back to those hedge funds and their gold bets?
That's the question, right? Remember how we were saying that when the Fed cuts interest rates, it makes gold more attractive?
Yeah, because, I don't know, it's cheaper or something.
Kind of. It's all about this thing called opportunity cost.
Opportunity costs.
Right. Yeah. So lower rates mean that holding on to an asset like gold, which doesn't give you any interest, becomes less expensive compared to like holding assets that do.
Okay, hold on. Rewind a sec. Some of us haven't quite wrapped our heads around this whole opportunity cost thing. Break it down for us.
Sure. So imagine you have, say, $100,000 to invest. You could just park it in a safe government bond, right? And get a decent interest rate. That's the opportunity you see. The thing you're giving up when you choose to invest that money in something else, like gold, which doesn't pay any interest.
Right.
So when interest rates are high, that opportunity cost of holding on to gold, it's high too.
Makes sense.
But when the Fed slashes those rates, suddenly holding on to that shiny metal doesn't seem so bad, especially if you think it's about to skyrocket in value, like these hedge funds do.
Okay, yeah, that makes sense. So lower interest rates equal gold, looking more appealing, especially when the world feels risky.
Yeah.
But your sources also mentioned some potential dangers with these big bets, like what if things go sideways?
Well, markets can be unpredictable, right?
Right.
Like, what if suddenly the U.S. and China start playing nice again?
Oof.
Exactly. That whole Cold War 2.0 idea that's been boosting gold, gone.
And what about oil? What could mess up those predictions?
Oh, a million things. A big hurricane in the Gulf that could disrupt production, send prices through the roof. Or OPEC, that big oil cartel, they could decide to cut production to stabilize prices.
So they're really playing a dangerous game here.
They're betting on chaos, sustained chaos.
Not just gold going up, oil going down, but everything staying messy.
Exactly that. And while, sure, their bets are based on, tons of analysis, there's always a chance that something totally unexpected could happen.
Like a curveball no one saw coming. It's a high-stakes game for sure. But you said something really interesting throughout this, like these market shifts. They don't just exist in some bubble. They affect us too, right?
Yeah.
What does this all mean for everyday people?
It's a really important point. And it's easy to forget that. Like, take gold, for example.
Yeah.
Increased demand from these hedge funds, that trickles down. It can mean higher prices for jewelry,
Oh, wow.
And on a bigger scale, remember, gold often underpins international relations, central bank reserves, all that, these shifts. They can influence global power dynamics in ways we can't even imagine.
So it's not just about numbers on a screen. It's about how those numbers connect to, real world stuff,
Yeah.
decisions that impact everyone. It's a lot. It can feel kind of overwhelming, all these global forces. So how do we even process all this?
You're right. It can feel like you're drowning in information sometimes.
Totally.
But knowledge is power, right? That's the saying, at least.
Right.
And this whole deep dive, it's shown us just how connected everything really is.
Yeah.
Like China's real estate market, right?
Hmm.
It stumbles, hedge funds go crazy for gold, and then suddenly, bam, that gold necklace at your local jewelry store, more expensive.
It's like a domino effect.
Exactly.
Hmm.
And we can't control those dominoes, unfortunately. But being aware of them, understanding what makes them fall.
But then you can kind of see it coming
Exactly. And then you can make smarter choices.
instead of getting crushed by the domino.
Exactly. And that goes for anything, really. Personal finances, investments, even just understanding the news, this knowledge, it helps you navigate it all.
This has been a wild ride.
It has been a lot.
We've gone from like those crazy hedge fund guys to China's property bubble to like the price of a gold necklace.
All in what, 20 minutes?
I know, right?
Why?
It just shows how these things that seem like so far away, they really do affect all
They're
of us.
all connected.
Totally.
And the more we get that, the better we'll be at dealing with this whole crazy global economy thing.
Absolutely.
Yeah.
So next time you see some headline about like a gold rush or whatever, an oil bust, just remember there's a whole lot going on behind the scenes.
Oh, yeah.
And who knows, maybe you'll even be able to predict the next domino to fall.
Maybe.